Anything that's surprising there, that bullish surprise is probably gone. If you're listening and you followed the virtual crop tour over the last few weeks, we don't really put that out as an objective source of where yields are going to be across the country. It's more of a perspective for you to see what other farmers are experiencing, other agents are experiencing across the country. But if you kind of follow that story, Christy and I, we kind of look at it from start to finish. And if you follow that story, and if you read it last Friday, we're hearing the terms better than expected. I was on the phone with a gentleman up in North Dakota this morning, and while yields certainly aren't good, they're better than expectation. And he said, sometimes it's not hard to beat poor expectations, but we're seeing that really from the Delta all the way up north. And so I think what Sterling's saying here is that 5103 on beans, that's a bushel per acre yield, to take it down to 50 looks very unlikely right now.
Yeah, I would definitely agree with taking it down unlikely and seeing it go up.
Yeah.
Don't be shocked. Don't be shocked.
It certainly looks that way. The probably the most likely thing is Sterling mentioned that September stocks report, and I've always been Sterling, you may share my sentiment. I've never been a big fan of a September 30th stocks report. What is old crop? What is new crop? What's in transit? What gets cleaned off of this report? It seems like that's typically where we have a surprise, either on that report date or a month after, is where we see this surprise, and we kind of blame it on the timing of the report. So that's something to look at. Exports are the big thing. Sterling, so the Chinese just got back off of holiday or time away, where essentially the entire workforce, the government, is kind of out of commission. And so we see commerce pick back up. Are you surprised at maybe the lack of soybean purchases by China since they've stepped back into the workplace?
Oh, a little bit. But typically when the Chinese, we've seen very good week-to-week export sales, and China has been in here buying. We haven't seen any big flash sales. Usually those tend to come, in November. That's when we start to see them. So if we start to see those pick up and see some good flash sales in the next 2 weeks, we'll be back on course. But export sales for soybeans have been quite stout and have returned to seasonal norms. We've also seen, a good pickup in exports as well. In fact, if we look up here, we had another report that came out. Here's soybean export inspection. So this gives us an idea how many went out. 1.6. That's double from where we were last week. And notice how good these corn numbers are. So we did see some pretty good inspection numbers. So we are moving soybeans. So I'm not too worried about that yet. If we don't start seeing them crop up, then I'm going to start to get a little bit concerned.
Now, Sterling, correct me if I'm wrong, that inspections is actually a physical inspection. And so as we get the Gulf back in line, we get more physical assets functioning, that may be a function of getting more terminals, some midstream shippers back online to see that. But the bottom line is we see that demand through basis. I mean, forget these numbers. Forget what we hear is going on in the Gulf. We can feel and see demand through basis levels. And if you're mid-Miss, lower Miss, Ohio, what have you seen on corn and soybeans over the last week? You've seen the basis go up, which is more often than not is a direct function of what's going on in the export world. So it looks like you've got a pretty good chart that illustrates that.
Yeah, that shows inspections, and this is seasonal year over year. And as you can see, this is the current year, the one that's highlighted, and we see a big seasonal bounce. And if we look at this as compared to average, you can see we're now above average. So that tells me that the Gulf is pretty much back in the game. And, you know, you combine that September stocks report with a hurricane hitting the Gulf. That does increase your margin for error noticeably. So, you know, how many of those are held up in transit and waiting to move? Well, we'll just see here, because that'll be re-reflected in the new report.
I see we've got a lot of familiar faces on here. Brian, Autumn, Dylan, just to name a few. If you guys don't care, you know, we're coming to a time of the year, and anybody's welcome to chat. We're coming to a time of the year where in the United States, we're taking out uncertainties in the market. Even though we don't know final numbers, we're taking those uncertainties out. Shoot us a chat to let us know whether you guys were above expectation, below, above average, how harvest is progressing out there. I think that I want to make sure we're all on the same page. Sterling and I get a lot of information, but we're always open ears to hear more perspectives out there. 5102, Sterling, I'm going to say that number goes up from here, just like you probably would as well. But I'd like to hear it firsthand from some of our listeners and folks watching today. So, Sterling, we're 5 minutes, T-minus 5 minutes and counting. You're 3 for 3 on WASDE. There's no pressure in this, okay? No pressure, but if you thought I was going to let you out, this is an extraordinarily tough month on WASDE for somebody to have a bullish or bearish sentiment going into these. You've nailed cotton now for 6 months. You've been pretty doggone good on corn and beans the last 3. Tell us what you think with 4 minutes remaining here. Is this a WASDE a market mover? Is it a yawner? What is it?
I think it's probably going to be a bit of a yawner, unless obviously a surprise will move the market. I don't think we're going to move that corn number too much. I don't think the soybean number is going to be as, I think the market has accepted that we are probably going to have a higher soybean number. So I think the market has pretty well priced that in, and we have done a pretty good job of knocking the well-being out of the soybeans. So I don't think, to be a big mover, it's going to be tough to get much upside traction and keep it. So if we got a big number, let's say, you know, the street's looking for 5102 on the soybeans. Let's say this prints 51.6. That's going to move this ending stocks number way up. And that would be a bearish surprise that even with our oversold conditions, we can hurt. I think corn, we're looking pretty neutral. I'm looking for if I were going to pick a spot for a surprise, got cotton exports at the street's looking for 15.6. That's only up fractionally. With the situation going on in China, they move that number to 16. That would move the cotton market noticeably. And we took a lot of fund froth off. We had a big blow off top here and some funds liquidated. So there is room for fund buying in there to drive that. Soybeans in the beans, funds are basically flat. So I don't know that they're going to try and push anything too much there again without a big surprise. Corn, I think corn we're going to cruise here again, unless the USDA makes this yield number. Right now, everyone's looking for it to come down about 0.4. Let's say we push this number, not 175.89, but let's say we take it to 176, just spot 5. That would be enough to create some nervousness. And expectations were pretty wide. I can show you my expectations, what I think ending stocks are going to be, if you like. So right here is where I put, so right here for wheat, I have 608. Beans, I'm at 265. Corn, I was a little bit bigger. I came in at 1525. And how I came in those numbers is with the corn, I didn't think yields were really going to back up as much as everybody else. I think things that improved in Minnesota, things that improved in Northwest Iowa noticeably, I think that may be enough to create a little bit of a situation. I also shaved exports back a little bit. I shaved feed fractionally.
I think there's a trend to shave those corn exports back a little bit. I think if you would have talked to some people on the front lines 3 months ago, 2.85 billion. Now all of a sudden a 2.6 number certainly looks like something that's a little bit more in the cards. I don't know where your number was at, Sterling, but that's kind of the sentiment that I get from friends that are in the business. I'm going to ask you about cotton real quick. We just got about a minute. A couple of years ago, we talked about, and we never know exactly what China's got, but we talked about the reserve of cotton. The kind of the quote was always they have a giant ball of lint in China sitting on the sidelines. Is China trying to build these cotton stocks back, or is this more of a hand-to-mouth type of supply? Do they really need it?
It's a little bit of both. One, they had there's a particular region in China where they produce most of the cotton. There's two problems there. One, they had crop problems. They didn't grow as much. Number two, a lot of upscale clothing manufacturers are refusing to buy clothes with cotton made there. So China, in turn, is forced to import cotton for the U.S., manufacture the thread, yarn, or the actual product, and then send it back, which seems a little bit different. And if it sounds weird, it's because it is weird. That is something where, again, I think we could see this cotton export number pop a little bit. And also, we've got world cotton ending stocks here. We're looking for a cut, taking it from 87 to 86.5. We pull that down, let's say that number comes in at 86, that's going to be enough to make an already jittery market nervous.
Interesting.
And getting back to that time. Yeah, we got 1 minute here. One thing about that corn ending stocks number, I took 50 off of exports and I took feed down a little bit, and that made up for the little bit bump I gave towards yield. So it doesn't take much to move this. Keep in mind, we had a really sloppy hog and pig report showing our hog and pig numbers were noticeably lower. That's something that isn't going to turn on a dime. So maybe our feed number might not be quite as stout as we were looking for. There's also been a lot of talk the last couple of weeks about herd liquidation in the cattle. And again, that will hurt that feed number. So I guess we'll know a lot more here in about 15 seconds.
Very good. A couple people chimed in, just as we thought, kind of above average yields in the Midwest. And I think that's going to kind of follow suit all the way up until you get to that northern Illinois, northern Iowa area. And then things might be below average.
There we are. Cotton production at 120, corn ending stocks 1.500, which is pretty bearish, actually. Soybean ending stocks 320, again above expectations, and wheat ending stocks came in at 580. So
how's the market reacted right now, Sterling? Have you got those quotes up?
I'm on a delay. I do not have real-time quotes. Do you have your quotes up?
I will have them up here in just a second. I'll share my screen. So the question is, how quickly do we go to trading South American weather after the bean number gets thrown out?
Oh, I would guess right now it's 11 o'clock. I would say we'll be trading South American weather by 10 minutes after. Or given the speed that things move, call it 3 minutes after.
You don't want to downplay these reports, but, 280, 320, wherever that bean number comes in, the bottom line, it's still tight. 320 is not excessive, but boy, we're starting to move into a direction that feels more comfortable for the market. And
a couple things here on second look here. Yield per acre for corn, 176.5. They raised corn yields. Soybeans, 51.5 from 50.6 last time. They raised that as well. And yield per acre on wheat took it down a little bit, which that shouldn't surprise anybody.
I'm not able to share anything, but we are down 10 on corn right now, 24 on soybean. At the moment, wheat is treading water. In Chicago, we're down 1 to 3 cents. In Kansas City, we're actually up 3 to 7. And looks like a pretty consistent trade, still staying around 24, 25 loss on soybeans right now. So we're nearing that $12 mark, 12.02 sterling on November beans.
Yeah. So the funds are clearly feeling confident about this because they're going to be the ones who really right on release, they're the ones who really hit everything hard. And obviously, they're feeling more confident about yields. And one thing I'd like to point out, we're at 51.50 now. Soybean yields are hard to predict. Those beans come out. A lot of times they're a little fatter, a little chunkier than what we expect in those yields. That yield maybe on the January report, we see that 51.8. Dare I say 52? It could happen.
Yeah, it certainly could. So not what we were looking for in regards to market reaction. I'm going to switch gears a little bit here. And we've got the WASDE information behind us. It is what it is. We can't change it. So let's start thinking about, I think most of our audience today consists of agents out there. What can you take to your customer right now that's going to differentiate you amongst your peers, especially your customers that financially make some decisions here on fertilizer over the next 3 months? Fertilizer on corn, I'll estimate that fertilizer is going to be about 22 to 23% of our direct and indirect inputs into an acre of corn. And it's also some of the more likely expenses that they will put into next year's crop this year. Call it for tax purposes, call it for planning, whatever that might be. Here's what's a little bit scary. Logistics have added a big premium to what a lot of people are paying for fertilizer right now. There's going to be a lot of potash, a lot of DAP spread over the next 3 months. Sterling, how important is it, even with the market that's down today, how important is it to match up 2022 marketing to what they're spending at might be an inflated price this fall?
I think it's imperative. The bottom line, what you're seeing out of this report is the U.S. situation has shaken off all the bullishness. All that bullishness is gone. We're getting a crop, it won't be a record, but we're still talking 1.5 corn production. We're looking at soybean ending stocks, while still tight in their soybeans, and they always are, we're in the upper band. So any bullish inputs we get, unless we have some sort of weather catastrophe in the next 4 weeks, which I don't see happening, you're now completely dependent on what goes on in South America. Completely dependent on it. And I would not count on South America having 2 bad years in a row. That is extremely unlikely. It was dry when they planted, yes. That means planting went well. That means it was easy. We're going to have to count on some sort of pretty severe weather foul up in Brazil to drive this, or some sort of big change in demand. Any changes in demand, I don't see ethanol going up. I don't see feed going up at least until February. So I think it's very important. This is a time to sharpen your pencil and really start thinking about what we can do for 2022, because we still have relatively elevated prices. Seeing corn with a 4 handle, again, should not surprise anyone if we don't have a problem in South America.
So the market's trying to battle back a little bit here, seeing corn down 6 right now. Chicago wheat's actually trading in the green, beans down around 20. So this market is resilient. It's still a function of we don't have excessive carryout. We've still got that risk factor, like Sterling's talking about, over the next 60 to 90 days for sure. This is just one of these things. We're coming to the kind of the end of the book. We kind of know how it ends, and when we know how it ends, we take out that risk factor that we've had in for the last 6 months. So it's one of those things. When we look at futures trade in October, November, even into December, a little bit less now that South America has come online and it's such an impact. We may not see that extreme volatility for a little bit because we know what the United States has produced.
Exactly.
Got a question coming in across my phone from a text message from a listener. We mentioned matching up hedges with fertilizer purchases. And the question is, any specific recommendations? And that's a challenge because Sterling and I like to use derivatives in a lot of cases. We talk about those. We talk about different, when I say derivatives, I mean options. And it's a challenging time to look ahead to 2022 because time value is so high. Volatility is fairly strong as well. It's tough to really get a lot of traction when it comes to a derivative. However, when we sell corn, we sell corn. If you have bushels that are not sold for 2021 in the bin, bushels that are not sold out of the field, you might have them on storage. When we make a sale, it really supersedes whatever expense year we're in. So selling corn right now is probably key as we match up with those expenses going into 2022. If you've got to do something, a futures only contract, not a bad place to start. If you got a blank slate, sterling, we're looking at north of $5 for CZ22. Give us your thoughts on specifics there.
Specifics, if you want to do the futures, you sell the futures. One thing, the market is depressed, okay? There's a lot of time premium in it, but maybe we look at doing some sort of combination of a call spread or something to help lay off that risk of having the market come back up. It would be, right now, the market's down and it's been down. That means it's easier to buy calls than it is to buy puts. If you try and buy those puts all the way out there, you're going to pay for it and pay dearly, because especially right this very minute, because that implied volatility is going to be all cranked up.
Completely agree. Completely agree. If you've got specific questions like that, if you've ever got a farmer that you want to hold their hand and ask those, we're available on email and we're available on the phone most often throughout the day. So don't hesitate to give us a shout.
Yeah, and if anybody wants to do like a Zoom call, and I can make you a chart and show you with circles and arrows very easily. We can go through that in great detail if you'd like to do that as well. That's something we can certainly do.
All right. Well, Christy, I think that's the show today. I think we've got like I said, the numbers are what they are. I don't know whether they're disappointing or exciting. It depends on what side of the market you're on. I think most of us would be a little disappointed in what we're seeing the board do, but they are what they are. So I'll let you take us away.
And one other thing, in today's Tech Tuesday, I'm going to be doing a before and after picture. I made charts, the technical picture before the report, technical picture after the report here when we get closer to the close. So you'll be able to see kind of how the world is setting up, and so far none of this is really going to change the picture too much. It was kind of drippy and bearish before, and it's drippy and bearish now with the exception of crude oil.
Yeah, well, thank you. Thank you so much. Yeah, you guys do not want to miss out on these reports that Sterling puts together. They are so good, and they will help you work with your producers to make sure that they understand what they're putting together with their risk management. Please reach out to us if there's ever anything we can do to help you work through these plans with your producers. Since we do have mostly agents on today, and we do appreciate your attendance. So want to remind you that we have our next marketing meeting next Thursday. It's the 20th, and we'll start at 9 a.m. So make sure you sign up for that. You'll be watching the social media, watch email. You'll be seeing that registration link on. Thank you again so much for joining us. Contact us at marketinginfo@sampointernational.com if you have any questions. We'll be happy to answer those as they come out. Have a great day. Take care of yourselves. And National Farmers Day is today, so enjoy that day today. Thank you for all you do. Have a great day.